Ladies and gentlemen, welcome back to the channel. We have some incredible Tesla stock news today. You're going to want to see this. Tesla stock at the time of recording this video is up around 0.6% today. Again, sitting right under that 350 level, which I think above 350, again, for anyone that does not know, is a breakout level. I mean, you're going to see a run above 350 well into the 400s. Even Dan Ives says today that a move to a $2 trillion market cap could be coming sooner than some people think. And that would be a move to about $640 per share. I believe Tesla could be a $600 stock by the end of this year. So that's right in line with my expectations. I will share that clip with you. It's about 3 minutes long in this video as well. Beyond that, the broader market's down about 0.1% on the SPY, that is the S&P 500. There's really mixed news today. There's good news and there's bad news. There's good news on a potential EU trade deal and some bad comments coming out from China. And I will share the headlines with you and break it down in this video. Now let's start first and foremost with this. Free lifetime supercharging for the Model S and X is now limited to inventory orders only in the US. Custom orders don't receive it anymore. Secretary Sean Duffy says that America is at the forefront of innovation. He says Tesla is one of the many companies helping our country reach new heights. U.S. Department of Transportation will be right there all the way to make sure Americans stay safe. Again, as I talked about in the previous video last night, I view FSD and specifically licensing of FSD technology as something that's going to be mandatory 5-10 years from now, kind of like seatbelts when the first cars were invented. They didn't have, seatbelts, right? And then over time, it became obvious that we should probably mandate these into vehicles. And that's exactly what happened. And I believe over time, the licensing of FSD or similar technologies will be not a luxury, but a requirement. And I think Tesla obviously is the candidate for that. Here you can also see a new Tesla Model Y Performance that looks like it's breaking cover with plaid wheels and less camo, although there is some camo on it. It seems like this is the performance variant. We also did get a good look at the next gen Optimus hand, and it remarkably looks like a human hand. I mean, it is very close. Now, Tesla today released a new video, even Elon Musk shared it himself, of Optimus completing new tasks fully autonomously. All the tasks were done by a single neural net and were learned directly from human videos. Taking out the trash is one, sweeping with a dustpan, tearing a paper towel, stirring a cooking pot, vacuuming, picking up the Model X 4-link from the right cardboard box and placing it on the right ramp of the dolly, opening a cabinet and closing curtains, all of which were autonomous. The robot did it itself by learning from videos. I mean, imagine all the things you've learned from videos throughout your life. If Optimus can do the same, the speed in which you could train something like Optimus will be dramatically increased. Morgan Stanley's Adam Jonas wrote in a new Tesla note, quote, "We believe events between now and year end will go some way to convince investors that Tesla is more than a car company. In many ways, we believe Tesla's role in the Musk economy is more important than ever before." Milan Kovac, Optimus Engineering / AI at Tesla, that's his title, reposted this video from the Tesla Optimus X account of Optimus doing all these tasks in which we just looked at. But he writes, "One of our goals is to have Optimus learn straight from internet videos of humans doing tasks. Those are often third-person views captured by random cameras. We recently had a significant breakthrough along that journey and can now transfer a big chunk of the learning directly from human videos to the bots. First-person views for now. This allows us to bootstrap new tasks much faster compared to a teleoperated bot data alone, heavier operationally. Many new skills are emerging through this process. are called for via natural language, voice, and text, and are run by a single neural network on the bot, multitasking. Next, expand to third-person video transfer, aka random internet, and push reliability via self-driving real life in the real or synthetic sim and real-world models. If you're great at AI and want to be a part of the biggest real-world applications ever, you really need to join Tesla right now. Hindenburg's economy minister Daniel Keller said in a new interview that Musk's politics are no reason to stop buying Teslas. Now, this is obviously based in Europe, where Elon has said, you know, Europe has the demand issue. Like, if there is a demand issue, it's in Europe. Everywhere else is strong. So that's one government official saying you shouldn't just not buy Teslas because of Elon's political views. Dan Ives said this about Tesla. He says, quote, "The path to a $2 trillion market cap is on the table. Overall, this is going to be a golden era for Tesla." Take a listen to this.
Elon Musk said yesterday as to how he would turn around the company, and he said, oh, it's already turned around, that you would agree with that.
I would. Look, we talked about on the show, it was a dark period when he was a Doge. We went through that. He ultimately was a fork in the road. Clock struck midnight. He picked Tesla. And now I believe that path to 2 trillion market cap is on the table because of autonomous and robotics. And I just believe now you'll still have some chop in terms of demand in near term. But I think overall, this is going to be a golden era for Tesla.
Dan, there'd also been this bull case after the Trump election, why you saw Tesla surge so much. And that bull case went something along the lines of easier regulation for Tesla, that he had the ear of President Trump. If we are seeing Elon Musk starting to pull back, not spending as much in DC, not as present with Doge, does some of that need to be priced out as well then?
Yeah, it's a good question. Obviously, Doge took on a life of its own. I think Musk recognized that in terms of some of the brand damages, which is ultimately why he had to leave Trump White House. But in terms, I do believe you are going to have less regulation. I think the pathway to autonomous is going to be there in level 4, not just for Tesla, but for Waymo and others. But I don't think it's priced in. I do not believe the market is fully pricing in the opportunity in terms of autonomous and robotics for Tesla. And I think what we saw from Musk, that's a different Musk. That's a committed Musk. Look, leaders lead. And that's what Musk is doing.
The issue down at play then, if you believe the long-term valuation comes down to autonomous, most people do. They agree with you. You've got to understand whether it's a regulation issue or a tech issue. And if you look at Waymo, Dan, it doesn't look like a regulation issue for the likes of Waymo. Waymo's now doing 250,000 paid rides a week. A few years ago, that number was 10K. Dan, how much of a challenge is coming from Waymo?
Look, Waymo are $230,000 cars, and they're essentially in 4 cities. Obviously, they'll expand. But I believe Tesla is going to go past Waymo 100 miles an hour in the left lane in the next year. In other words, I believe Tesla, from a market share perspective, given scale and scope and what they could do across the U.S., I think Waymo will be a rounding error relative to what Tesla could do on autonomous. Clearly, Waymo's had the leader. But I don't view that as something that's static. I think Tesla has a huge opportunity ahead of it.
Without a doubt, that can change, Dan. But what are you looking at right now that's giving you that confidence? It's clearly not blind hope, at least it shouldn't be. What gives you that confidence at the moment? What do you see?
What I see is Austin's going to take off in June. I think you're going to have basically 15 to 20 cities in the next 6 to 9 months. And the scale, we're talking about a few 100,000 robotaxis into next year, and ultimately something that's going to approach in the millions. And I think when you look again to level 4 and you look at where they're heading, I think that's the new era of growth for Tesla. And that's why it was so important for Musk to make that 180, refocus on Tesla. And that's what he's done. And I think if I told you a month ago that we'd be talking about this, it would be a dream scenario. And I think that's what the stock's reflecting too, from those dark days that we saw starting in the early parts of the Trump administration from Musk.
I'm glad that Dan Ives specifically talked about the scaling aspect of robotaxi, because that's something I have talked about as well on this channel many times before. And that's where people are really missing it. Okay. The scalability of robotaxi could be really fast. As Dan Ives said, 10 to 15 cities over the next 6 to 9 months. Okay. That's where the value will be added from robotaxis and reflected in Tesla stock. Okay? It's not being reflected today, but it will be once that scaling process really gets underway. And that's one reason why I do believe the next 6 months for Tesla, you could see almost a doubling in the stock. You could see Tesla approach or break that $2 trillion market cap level in the 640s, right? 630s, 640s. I believe Tesla is going to be a $600+ stock by the end of this year. That's, I'm pretty confident in that at this point. And Morgan Stanley today reiterates Tesla as a top pick with a $410 price target. In option activity today from hedge funds and institutions, you have seen 68 different trades totaling $29 million with a positive order value of 82%. So definitely on the slower side today. But you have 1.25 million shares that are being covered on. Okay. This is as a new short interest report has come out, indicating not much of a change in the overall short position. You have short interest that actually went up a little bit to 2.9% from 2.89%. The dollar amount sold short in Tesla fluctuates daily based on the price of the stock, but currently at about $28 billion. And the amount of shares sold short did go up from 81.08 million to 81.27 million. So there is a lot of dry powder, if you will, to get that short squeeze above 350. And I think that's exactly what it will be as you break above 350. I've called for this speed bump, this slowdown in the rally as we approach 350, little bit of consolidation. And that's what the chart looks like. It looks like a consolidation phase before a larger breakout. And I still think that larger breakout is coming. And we need to be on the lookout for it, as you're only $4 away from 350, but getting a lot of resistance back and forth, push and pull. Right every time you hit 350 or a little above that, you get this slowdown. The bigger the slowdown, the bigger the resistance, the larger the breakout when that does come. Now let's get into some of your big market moving news today. Some speculation on a Europe trade deal that could be coming and some bad headlines from China. Overnight last night, the China Ministry of Commerce comments on the US chips ban. They say that the US is abusing export controls. And China says US attempted ban on Chinese chips is discriminatory. They say that the US actions harm rights and the interest of Chinese companies. And China is urging the US to correct its improper actions immediately. China vows to safeguard their rights and interests. China also says that US measures on China chips impact global supply chain. China says that US measures are typical unilateral bullying and that the US actions seriously damage rights of Chinese companies. China's vice foreign minister meets the new US ambassador to China. So again, these headlines we're getting from China overnight and this morning just didn't sound great at all. Now, China says they aim to collaborate with the United States in enhancing steady relations, according to the Ministry of Foreign Affairs. NVIDIA predicts a $50 billion China AI market in 2026, according to Jensen Huang. He does say that AI chip export controls are a failure. The German defense minister says it remains to be seen whether the U.S. will join next package of Russia sanctions, with talks ongoing. China's MOFCOM says reciprocal tariffs brings uncertainty to the world economy. And Japan's Prime Minister Ashiba says selling Japan cars made in the US is one way to cut the surplus. Stanley today upgrades US industrial sector to overweight, and they have downgraded the US utility sector to equal weight from overweight. Target also had earnings this morning, did not come in good at all. Adjusted EPS $1.30. The estimate was $1.66. Net sales at $23.85 billion. Gross margin at 28.2%. Comp sales came in at negative 3.8%. Comparable sales. The estimate was negative 1.94%, so that was almost twice as bad as expected. EBITDA came in at 2.29 billion. The estimate was 1.84 billion. So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. Came in better than expected, so that's a positive. They see full year adjusted EPS $7 to $9. Previously, they saw $8.80 to $9.80. So they lowered the high end range. They lowered the low end range. Overall, not great. But Target only down about 4% today, just reflects a lot of that bad news has long been priced into the stock at this point. U.S. House Speaker Johnson says we came to a $40,000 SALT deduction cap agreement. This was one of the holdups in getting this funding bill actually onto the floor of the House. China says U.S. trade talks are an important step to bridge gaps, but multilateralism is needed to find a way out from the global trade turmoil, China's statement to the World Trade Organization said today. U.S. House Speaker Johnson says we are planning a floor vote on the tax bill today. Again, I think it's something that Wall Street will start to pay more attention to is deregulation, lower taxes, what the landscape could look like for corporate America. Again, tariffs have kind of blinded us from that. We really haven't paid attention to any of that like we were in January and February of this year. I think that could be some of the next leg of excitement for this market, especially when we start to get more CPI numbers that come in and show we don't have an inflation problem like it was thought we were going to. That's where things get really crazy, and the Fed can start to lower rates and so on and so forth. White House senior advisor Hassett says if we get to 3% growth, Trump's tax bill pays for itself. And then he says we're going to get more than 3% growth. So if that's true, without an inflation problem, you would definitely want to be long this market. Germany's Chancellor Merz on tariffs says there are signs that the US could be interested in a deal with the EU. And Germany's Chancellor says when he visits the US, he will try to persuade Trump that we should have no tariffs on either side. And the EU is preparing a trade proposal for the US to steer momentum in talks. It says the European Union was expected to share a revised trade proposal with the United States, hoping to boost momentum in talks with Trump's administration amid lingering doubts about a transatlantic deal. According to sources familiar with the matter, the new paper includes proposals that consider U.S. interests such as international labor rights, environmental standards, economic security, and gradually reducing tariffs to zero on both sides for non-sensitive agricultural and industrial goods. The paper, which was intended to be sent to officials in Washington earlier this week, also outlines mutual investments and strategic procurement in energy, artificial intelligence, and digital connectivity, according to people who spoke on the condition of anonymity to discuss private deliberations. So long story short, it looks like there may be some progress at least starting to take place with an EU trade deal. The U.S. House Speaker Johnson and the Freedom Caucus are meeting at 3 p.m. today to try to get this tax bill on the floor. And Oman's foreign minister says a fifth round of Iran-U.S. nuclear talks will take place in Rome on May 23rd. Trump also said today we're doing big deals with India and Pakistan. Here on the day today, the percent of stocks trading above their 50-day moving average coming in at 67.5%, down about 3.5% today. So again, a little bit of consolidation, little sideways action here is healthy, right? We were already on the high side of, rallies. You can get into like the 80% range, 85% range is where we were in December of 2023. So there could be like another 15% or more to go to the upside in an optimistic scenario, but getting a little bit of a reset here, definitely not a terrible thing, especially when the breadth has been so aligned in this market. Like breadth has been so strong. It's been a great sign, but everything has been going up together. Eventually that will need to break in order for the headline markets to move higher. But we'll see kind of when that happens. Doesn't look like it's happened yet. Seems to be some pretty good breaths still out there. But I do believe higher beta, higher momentum, higher growth is probably going to be the area to excel higher from here. Again, over the next 6 months, as we do get lower inflation numbers, cuts from the Fed, deregulation, lower taxes, and hopefully 10-year treasury yields start to behave a bit. That's something we also need to talk about here in this video, because as I've said before, above 4.5% on the 10-year treasury, it seems to be a sell signal from algorithms, right? Once you get above 4.5%, it seems like algorithms want to sell stocks, right, in different areas. Nasdaq's green today. Russell down 1%. Nasdaq's up around 0.5%. S&P's down 0.1%. Dow is down almost 1%. I think that has a lot to do with 10-year treasury yields just getting blown out at this point. And inevitably, you would hope you would start to see some relief there and yields actually start to come down. That would fuel a larger rally in markets. So I think it's kind of just a wait and see kind of thing. But if there is a risk to markets at this point, it is a bond market blowout, something the Fed would have to respond to, something that would maybe, you know, force Trump to get even more relaxed on the whole trade war situation. It could be a positive outcome, but between now and then, there could be a little bit of volatility due to the bond market. Now, CNN's Fear and Greed Index today coming in at 69. It's been kind of in the 69 to 70 range for the last couple of days. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put in call options, greed. Market volatility is neutral, and safe haven demand in extreme greed, as well as junk bond demand also in extreme greed. And coming tomorrow, we will get a new AI investor sentiment survey Thursday morning. Last Thursday, you came in at almost 36% bull, 19.7% neutral, and 44.4% bear. Okay, so people are still very bearish on this market, and that's one reason why I'm bullish, is because I think there's a lot of people that are on the wrong side of this, that are bearish when they should probably be bullish at this point. And there's a lot more, you know, bullish positioning that people need to do. With that said, there is some data coming out tomorrow morning as well. Chicago Fed National Activity Index expected to be roughly in line with where it was last month. Initial jobless claims expected to rise a little bit to about 230,000. Last week was 229,000. A big move higher would obviously not be good. If this number comes in low, that is positive. We will get S&P Global Composite PMI, manufacturing PMI, and services PMIs that will come out at 9:45 in the morning tomorrow. And then existing home sales come out at 10 p.m. Kansas Fed Composite Index and Manufacturing Index come out at 11 o'clock in the morning. Fed Williams speaks at 2 p.m. That is all for the catalyst tomorrow. And really, that's like all of the data we've gotten this week. It's all going to come out tomorrow morning. So if there is going to be a larger move, it could be tomorrow morning. And again, I think the broader markets are really just consolidating here as well. That's what it looks like to me, taking a little bit of a breather from this rally and inevitably going to move higher. It's actually phenomenal how well markets have held up in spite of 10-year treasury yields that just continue to go higher, especially above 4.5%, and the S&P's not destroyed. I think that's good. If we can start to get those yields to come down, well, that's going to be a positive, you know, driver for this market. So we'll see. Let me know what you think down below in the comment section. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.